Good morning and welcome to this Moneycontrol live stream. You're watching Opening Bell with me, Nandita Khemka. Midweek blues across global markets. We've seen the US markets tumbling overnight once again, on concerns of lofty AI valuations. Mind you, today Nvidia will be reporting numbers, in after hours in the US market, and of course we will be reacting to it tomorrow. But yes, lots riding on that, given the fact that we will be watching out for what the Nvidia CEO also says about that $500 billion order book that was being talked about, whether he rupees or thereabouts. DIIs, however, continue to buy, and they bought shares worth 6,100 crore rupees in the cash market. Put call ratio fell to 1.02 versus 1.13 in the previous session. But on that note, to understand the texture of the market, let's bring on board Ajit Mishra, Senior VP Research at Religare Broking. Ajit, lovely chatting with you. What is the setup really looking like for you? GIFT Nifty hinting at a mildly higher start yesterday. We did, make an intraday recovery, but completely fizzled out. What do you sense? Do you see some strength, or would you say that it could in fact edge towards 25,700? That happens to be the next support.
Yeah, good morning, Nandita. So, Nandita, just see the broader picture. Means what we are observing that it's been almost like, we are in the fifth week of consolidation largely. Means earlier we were seeing more of time-based correction to start with. Then there was marginal dip. Last week it turned out to be a recovery. But we have still not surpassed the October month high, which is placed around 26,100 mark. So it seems like that after the October rally, market is taking its own time to surpass this level, because we are just whiskers away from the record highs levels, which is around 26,277. So I feel it's a healthy consolidation as long as, like you rightly mentioned, 25,700, the 20 days of exponential moving average. Until we decisively break that mark, this consolidation should be seen as a positive sign. Because if you talk about the key sector, banking specifically, which is making record highs with every passing day, rotational basis, we are seeing heavyweights from across sectors also participating in the move. So barring small cap, wherein we are not seeing any strength, decisiveness, rest of the pack, they are contributing, they are helping the market to maintain the positive tone. So yes, indications are in the favor that the consolidation might continue in the index, but 25,700, as long as we are maintaining this mark, one should continue with buy on dips approach. The moment we'll cross 26,100 levels decisively, we are set for the next leg of the up move. So maybe it could be some fresh trigger because earnings are behind us now. So any positive clues, because mentioned about Nvidia's results scheduled tonight. So that might subside at least some volatility in the US market, which is currently experiencing, and help the markets to regain the composure and inch toward the higher levels. So as of now, stock specific approach is something that you should continue with 25,700 being the key support.
Okay, 25,700 key support, and unless 26,100 gets taken out decisively on the upside, you could still see some bit of weakness or volatility on the charts. But what about the Nifty Bank Index? We conquered that 59,000 mark earlier this week. In fact, we hit record highs. Yesterday, I think the Nifty Bank Index managed to outperform. What are your thoughts there? Which are the stocks that you're liking on the Nifty Bank Index?
Right. So it's like a lone warrior which is currently holding the front, because IT, after the initial surge, we are seeing a bit of profit taking here also. But the texture looks positive in banking, despite the yesterday's profit taking at higher levels. And we believe that 59, 200, 500 is the area basically where we have the next target zone. In case if there'll be any profit taking around 58, 500, 58, 200 zone, one should consider as a buying opportunity. PSU banks, outrightly, they are leading from the front. No doubt, selectively from the private banking space also, we are seeing strong traction. So stock like Axis, wherein we have seen a fresh breakout. Then we have stability in SDFC and ICICI too, but the kind of leadership which we were eyeing, at least from the private banking space, that is missing. But on the PSU side, be it Bank of Baroda, Canara Bank, SBI, all are firing. So I feel that until we see some decisiveness in the private banking majors, PSU is something that you should be preferring.
Okay, that's the view on the entire banking universe. But just about 3 minutes to go for the markets to open. Ajit, what would your recommendations be for our viewers this morning?
Yeah, so while we are seeing consolidation, Nanta, still certain pockets are holding well. In fact, we are seeing fresh breakout. So Hudco is one name wherein we have seen fresh breakout almost after like 2 months of consolidation. 257 is what we are eyeing as a target zone. So with stop at 236, one can accumulate Hudco at current levels. Then we have M&M Financials also. After a strong surge post numbers, there was a marginal retracement, and now after forming a pivot around the short-term averages, it looks set to resume the uptrend again. So 338 is what we are eyeing in M&M Finance. So with stop at 314, one can go long in M&M as well.
Okay, those are the recommendations. Hudco, M&M. Keep that on your radar. Just want to take stock of what the market is doing in the pre-open session. Hint of green on the Nifty, marginally so 8 points higher. The Sensex down 29 points or thereabouts. Mid-cap index also extremely flat, but trading with a positive bias. Let's see. We're hoping for a mildly higher start, and whether or not we manage to sustain any early gains or not, that will also be crucial to watch. But let's talk about the Adani group of stocks. Rajiv Jain's GQG partner has hiked stake in 5 Adani group firms in a block deal of somewhere around 5,000 crore rupees or thereabouts. Now, stakes have been hiked in the likes of Adani Enterprises, Adani Ports, Adani Green, Adani Energy, as well as Adani Power. Which of these names would excite you? Chartically, I think Adani Enterprises has gained somewhere around 7% or thereabouts in the last 5 sessions. Would you prefer an Adani Enterprises, Adani Power, or Adani Ports? Which are the stocks that are looking exciting on the charts within the Adani group of stocks?
Adani Ports definitely leads the list because if you see the kind of consolidation that the stock was experiencing for almost 1.5 years, we have finally ended the same last week, and it's still holding above the neckline area of the pattern. So indications are in the favor that it looks comparatively stable, unlike what we usually see the Adani group of stocks wherein volatility remains usually high. Here, the indications are in the favor that we are gradually inching towards the record high zone. So definitely this stock is something that you can look to accumulate. 1445 is the area basically where we have the support, and upside around 1570, 1580 is something that one can maintain as a target zone.
All right, those are the targets and stop losses to watch out. Adani Ports, that's the best poised on the charts within the Adani group of stocks. But let's take stock of how the markets have opened up. First ticks coming in, not a great start, so to say. We slipped below that. In fact, we remain shareholders of HUL will be eligible to receive shares of the new entity, and the demerger scheme will be effective 1st of December. Staples haven't really fired up, Ajit. What are your thoughts? I think Tata Consumer is the one that has outperformed other staple names. So how do you look at shares of HUL, Tata Consumer at the current juncture?
So that's right, and that means except Tata Consumers, we saw that majority of the names after the initial positivity which we saw post the subsidy cut announcement witnessed attraction, but they couldn't sustain the gains, and that holds true for HUL also. Means again we are back to the square. Broadly, it's been almost like 4 years now that we have not seen any major returns, and on the short term basis also, we are still struggling around the major averages. So it seems like that the consolidation tone or the sideways bias is here to stay for a longer period until we decisively see some sign of decisive traction and some accumulation as well. So as of now, it seems like that 2500, 2550 on the upper side will continue to be the area where it might face resistance. On the downside, around 24,000, 2400, 2350. So this 200 point is something that might continue to hover in. In case if you are stuck, use any recovery to reduce your position. If you are planning any fresh trades, strictly avoid.
Okay, that's a call on HUL. But Marico, what about Marico? Because a lot of technical analysts have flagged off Marico among their top picks, and the stock did hit a fresh 52-week high earlier in the week. Would you also be a buyer of Marico at current levels?
So yes, Marico and Britannia, alongside with Tata Consumers, among the FMCG basket, wherein we saw relatively higher strength, throughout this consolidation or declining phase in the market and the FMCG space as well. So after this new record high, there could be some consolidation. So it's not that one should jump into a trade. Yes, in case if there is any dip around, let's say 740-45 mark, there you can start accumulating the stock with 730 as a stop loss. And gradually we can see the stock inching towards 780, 800 mark.
Okay, that's the view on Marico 780, 800. Those are the levels that one can expect on the charts. But let's talk about the second big gainer on the index. That's Infosys. The buyback date has been announced. The buyback will continue till the 26th of November. The stock is trading just sub 1500 levels at the current juncture. Last 5 days hasn't given positive returns, but IT, we do see those days when IT takes the lead, but then it doesn't really manage to sustain. Would you say that the risk reward for stocks like Infosys, TCS is looking good after the kind of underperformance they have seen in comparison to the rest of the market, the IT pack?
Yes, Nanda. So let's say if the view is medium to long term, definitely they offer better risk to reward ratio. But in the short term, the lackluster move, like you rightly mentioned, that one day we see, in fact, like there were a couple of occasions where they were leading from the front, but they couldn't sustain the gains. Means for the Nifty IT index itself, we are still trading below the long-term averages. So the moment, let's say, we surpass this 37,000 mark in the Nifty IT index, then probably it would set the stage for the next leg of the up move or recovery in the Nifty index for roughly around 2,000 points. And then majority of the large cap names, including Infosys, can surprise the market positively. But as of now, TCS looks comparatively better structurally, when it comes to the fresh long positions or accumulation. Infosys, it might continue to trade in a range until we see some sign of decisiveness above 1550 mark. So as of now, IT as a pack, consolidation is likely to continue. But yes, if somebody is looking to accumulate for medium to long term, they can definitely consider.
Okay, you can look at accumulating the likes of TCS and Infosys for the long term. But let's talk about a mid-cap buzzer, Deepak Fertilizer. The stock is among the top gainers on the Nifty 500 index, and there is a catalyst because MK Global has initiated a buy call on the stock, the target price of 2,000 rupees. Now, they've mentioned that the company is a leader in the mining and industrial chemicals with a dominant share in domestic markets, and it's also a market leader in water-soluble fertilizers. They've also mentioned that the product portfolio is well aligned with India's growth story. And of course, the company is planning to transition from commodity to specialty offerings across its existing product lines. How would you look at the likes of a Deepak Fertilizer? Because all these fertilizer names, they see some pops here and there, but then the follow through buying never really comes by. For a stock like Deepak Fertilizer, would you look at it as a trading play now? And what are the next levels to watch?
So yes, Nanda, means it's very difficult to time such stocks wherein we see a cyclical move which could last for a month or two, and then usually the moves fizzle out. But surprisingly for Deepak Fertilizer, it's comparatively stronger. Means after making a new record high, there is a marginal retracement towards the long-term averages, which is roughly around like 3, 4, 5% away from the current area. So that clearly shows that in case if the entire sector is on the back foot and you are still maintaining to hold around the record high zone, that clearly shows strength. So the moment we will see some bit of buying interest, because the pre-budget discussion have already started. So and in case if there be any positive things for the agri pack, you'll see that Deepak Fertilizer can positively surprise the market, and probably 1600, 1650 is something that the stock might test. So as of now, 1370 is what we are eyeing as a strong support area, and that should be the stop loss if you have any existing position or you are planning any fresh trade.
Okay, that's the view on Deepak Fertilizer. But on that note, let's shift focus to all the viewer queries that are trickling in. I know that for recent listings, you guys don't have a lot of data to really call a trend. But I mean, I'm really tempted to ask you about your thoughts on how Grow has been rallying, and the stock price is quoting at 90% above its IPO price. It has hit major milestones in terms of market capitalization as well. We keep getting queries from our viewers as to what they should do because they're holding their shares. This Naveen has sent a query. He holds 1,000 shares at the rate of 103. He wants to know whether he should book profit or not. I mean, although I'm sure you don't have a lot of data, but any thoughts on how people should navigate their positions? Should they hold on to it, or should they book profits partially at least?
So my question to Naveen is, then Naveen, what kind of returns that you were anticipating before you took the position? Means 103 and now 183. So it's a phenomenal return. Means in case if you hit the jackpot, and especially when we know that it's riding for some other reasons also, because we have recently read that few shorts are also trapped. Not few, but it's a good quantity. So that is triggering this kind of a phenomenal surge in the stock post listing. So as of now, at least 70-80% is something that you should definitely book if the view is short term and you've already got the returns. If you are an investor and you have a time horizon of 2-3 years, definitely you can stay put. There's no harm in that.
Okay, that's the view. It depends on what your expectations are at the end of the day. But yes, that's what Ajit's advice is. It makes sense to book some profits. But let's shift to the next query then. This one's coming in from Preeti Singh. She wants to know your thoughts on a fresh entry in Reliance Industries. She recently exited Reliance after making a 15% profit, which is a decent profit. Now at 15, 17 or thereabouts, is it a good time to enter or should one wait?
So first of all, congratulations, because you have made decent returns. 15% is not a usual return in Reliance, kind of a heavyweight, and you have exited at a very right price, Preeti, because this is the area basically last time where Reliance, witnessed sharp, profit taking and correction after that. So there is signs that we are seeing time-wise correction while the markets are sitting on the sidelines. Reliance is comparatively holding strong, which is definitely a good sign. Should you look for fresh long positions? My approach would be to accumulate, not to go at one go. So let's say you buy at current levels. In case if there'll be any decline around 1480-85 zone, you may add more. For the entire position, 1460 should be your stop loss, and above 1450, 1540, sorry, we are set for the new record highs. So accumulate in the range of 1515 to 1485 with stop at 1460.
All right, that's the view. Accumulate, don't go all in at one point in time. But let's move on to the next query then. This one's coming in from Dheeraj Sharma, and he wants to know your thoughts on IEX. He's holding some shares, 30 shares at the rate of 188, making a fair bit of loss here. Wants to know whether he should hold, sell or average. Of course, he's looking to reduce his loss. The stock of IEX has tumbled over 35%, since mid-July. What would you advise? Would you advise him to average or, reduce positions at every bounce, or what should the strategy really be to at least pare down some losses?
Right. So Nanda, after this, sharp cuts, post that news of its monopoly in under danger, and since then we are seeing that stock has been struggling. Means there were multiple attempts for recovery. Around 150 is the mark, basically, where it it tested twice, but it couldn't sustain. So that clearly shows that the strength is missing, and 130 on the downside is what is currently playing out as a key support area. So we are very close to that mark. So probably we may again see an attempt of a rebound, but the trend looks negative overall to us. So I definitely recommend him to reduce his position on rise. Let's say any rebound towards 145.50 zone, you should look to liquidate, or in case if it breaks 130 prior to that, then also you should liquidate, because in that case there could be a next leg of fresh selling which could push the stock towards 100 or maybe lower.
Hmm. Okay, that's the view on IEX. Hope that answers your query. There's a query on Axo Nobel. I want to take it up. This one's coming in from Aisha. Wants to know whether it's ideal for a short-term entry now. But within the paint basket, it's the leader, Asian Paints, that's really making headlines after good set of numbers. Stock is also, seen an upward trajectory. So, would you look at Asian Paints, or would you advise, a short-term play on Axo Nobel as well?
So Axonobel, I would definitely avoid because the kind of price action and volumes, this is not very encouraging for short-term trades. Definitely Berger, Asian Paints, they are better candidates to look at if the view is short-term. But after this recent surge, I feel that one should not jump into a trade, let them consolidate because the move was very swift, roughly around 11% kind of a gains that we had in Asian Paint last week. So let them consolidate a bit and keep a close eye on crude oil as well. Means we usually see that the movement of crude usually influence their stock prices a lot. So as of now, yes, Berger Paint and Asian Paint is something that you can look to accumulate on dips, but not at the current levels, and avoid exo.
Okay, avoid Axo, but you can look at Asian or even Berger Paints. But couple of more queries then. Let's talk about Sona BLW as well. I spotted a query from Alex. Wants to know whether a fresh entry for the long term is advisable. What would you advise? The stock has done okay in the last month or so. It has gained somewhere around 8% or so. But of course, it's come off quite a bit from its 52-week high of 700. So, do you see the room to rally here on, and should one really position themselves in the stock?
So yes, Nanda, recent price action indicates a possible reversal. Means not a short-term reversal, but in fact a long-term reversal. Need slightly confirmation from the volume also, but overall it looks positive to us. Means yes, you can start nibbling in Sona with medium to long-term perspective. Now 460 is what we are eyeing as a strong base, means 10% away from the current area. So if you are okay with that as a stop, you can definitely start nibbling. 540, 560, that will be the next key decisive zone, and then probably we'll have a confirmation that we are set for decisive uptrend in the medium to long term. So selective buying can be done at current levels as well.
Okay, selective buying can be done at current levels. Hope that answers your query. Let's talk about one more query, then two more queries to go actually. One on the flexible workspace. Yesterday, WeWork India saw good traction. Of course, there was a positive note coming in from Jeffries. Office space. There's a query on this stock from Satya CK. He wants to know whether he should average for the long term. The stock has been stuck in a downtrend. What is your advice on an office space, and looking at whatever data you have for WeWork India as well, how is that stock looking?
Samantha, most of these stocks are recent listings, so we don't have much data to comment upon. But basis the available information, it seems like that they are trying to form base. So usually, when it comes to the new IPOs, one should wait for them to surpass the listing high at least for any confirmation that yes, they are establishing a trend and they are set for at least some directional move. So as of now, that's not the case for WeWork. Roughly around 660, 670 is a zone basically where it made a record highs post this listing. So the moment we surpass that zone, then probably we can see a next leg of the up move. But since your view is long term, refrain from any aggressive positioning as of now. Wait for at least 2 quarters of numbers and see how the companies are performing, what kind of guidance the management is offering. Then you should look to invest or add to this position.
Okay, point taken. Very quickly, last query coming in on a Fortis. Person wants to know, whether he should exit or average or remain invested. He has 550 shares at the rate of 1057. What would you advise here on a Fortis, Ajit?
Sunanta, we all know the kind of momentum the stock experienced from roughly around 250 to 1100. There was hardly any decisive correction. It was more of time-wise correction that we had. Now, at least we are seeing some sign of stability, reversal, you can say short-term reversal, which could further push the stock lower, let's say towards 870, 880 area. So if the view is long-term, you can definitely look to accumulate around that area, not before that. If your view is short-term and you are stuck, use any recovery towards 970, 980 area to reduce your position. And in the interim, your stop should be at 910.
Okay, that's the view on Fortis. But with that, we are completely timed out. Ajit, would like to thank you for taking out time and joining in and sharing your thoughts, also helping our viewers with their stock-related queries. I look forward to our next interaction as well. Have a good rest of the week, and I'll see you soon.
Thank you, Nandita, and same to you. Take care. Bye.
Thanks a lot. Well, on that note, markets on the back foot. Midweek wobble, you can call it that. 25 points down on the Nifty. Stocks, that would make an impact in today's trading session. And, of course, we'll see you at 3 p.m. then on closing bell. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates. I'll see you soon.